environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Copper Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
Are you all suitably fed and watered? Yes? No? What about you, sir? Strapping young lad in the middle row here. You're bringing down our age demographic, our median age, quite considerably. How old are you actually, sir? This fella here. My mother said not to point. Yes, you. How old are you? 21. 33. Okay, good. Okay, that's good. It's good to see people starting their investing journey a little bit earlier. I've actually got a 17-year-old at home who just went and worked in the grain bins at CBH over summer and came back with 20 grand in his hand. He's pretty happy. And then he announced to me, cop this, during the pandemic, he took up investing because we were down with all the old boys at the surf club. He had nothing else much to do. And they talked investing with him. So apparently he's got a little portfolio of about 40 grand. I said, well, that's great, sweetie. I've got tax of about 60 grand I need to pay. So you could be where the bank of mum, you could be the bank for mum at this point in time. But it's great to see, people learning a little bit earlier as well and getting to the lifestyle that they would like to be at earlier. Rather than Jerry and myself a little bit later on. But as long as we get there, that's the main thing. And lots of opportunities here and some more great stories in this next half. So we are halfway through day one. Still plenty to go. We aim to be out of here by 6 o'clock this evening and at drinks. And of course, you're all invited to come and have a bit of a drink with us and a bit of a yarn too. Now, as we go through this afternoon, the length of our presentations are going to go from 15 minutes down to 10 minutes. They're going to become a little bit more power-packed. You still, of course, will have the opportunity to speak with our presenters afterwards. So we're going to start off this one with a bit of insight. And I think one of the big questions for all of us is, what are the key themes and the trends for 2023? I am not the person to ask. I do not have the answers. And even if I did, I would not be allowed to give them to you because I am Switzerland. That is my role up the front here this year. So I know a man who is very well read on the subject, and he actually works with Hamilton Locke, who are our legal sponsor here at RIU. So he is the perfect person to address us. And Stewie only has to pay him in sausage rolls and the odd white chocolate cheesecake, which would be good. Is that okay with you, Michael Boyce?
Don't shortchange me. He offered me a couple of beers to wash down those sausage rolls as well.
All right. Well, I'd like you all please to put your hands together. This is Michael Boyce. He's a corporate lawyer. He's got almost 20 years experience specialising in mining. Let's hear what he has for us today.
Thank you very much. I'd just like to start by sending out a thanks to the organisers of RIU. I think in the last 2 or 3 years, particularly, this conference has gone from strength to strength. And I think it really is the premier forum for mining exploration companies in Australia. And we're delighted and very proud to sponsor it and to come along and have the opportunity to speak to everyone. It's always fantastic to get out of the city and come down to Freo. And there's always lots of chatter both inside these rooms and over a beer out the front. It gives me great pleasure today to speak briefly on behalf of Hamilton Locke. Hamilton Locke law firm opened up our office in Perth about this time last year. And whilst it's a new name, there's some familiar faces that I'm sure a lot of people in the room have dealt with over the years, with the office being launched by Sean Hardcastle, Deanna Carpenter, Jeremy Newman and myself. Since opening the doors 12 months ago, we've added a litigation partner, property and projects partner, and most recently an employment and OH&S partner that's about to come and join us. So whilst the team is relatively new in Perth in terms of Hamilton Locke, we've actually got a broader offering. So offices in Sydney, Melbourne, Brisbane, Newcastle and Auckland as of December last year. So we provide a full service offering nationally, and do a lot of work, obviously, in Australia, but overseas as well. As you can see from the slide behind me, we hit the ground running in 2022, having only opened the office in March last year. And our industry-leading ECM and mining team, in particular, advised on 64 ECM deals, 17 M&A deals, and were already by the end of the year right at the top of some of the league tables. We continue to pride ourselves on our excellent relationships with all of the key stakeholders, particularly ASX, and aim for an efficient and commercial approach. We always try and provide solutions, not more questions to our clients that come to us. In the time today, I'm just going to touch on 3 topics briefly. some M&A and ECM trends for 2023, some key mining themes for this year, and then just some observations more generally on some of the things that we saw in some transactions last year and that impacted the mining industry. Before I talk about 2023, I just thought it was worth reflecting briefly on 2022. It was a pretty interesting year and changed quite a bit. The start of the year was still pretty hot on the back of an unbelievable 2021. But then things started to slow down given global recession fears, rising inflation and interest rates, and geopolitical tensions. On some of the raw numbers, we saw 104 companies list on the ASX last year, raising just over $1 billion. representing a pretty significant drop-off from 2021, albeit that was a pretty unprecedented year. But 2021, there are actually 241 companies that listed, raising almost $13 billion. So whilst deal value and volume were significantly down in 2022, this was from almost a one-off year in 2021. And notwithstanding this, it's actually still about 5 to 10% above kind of the traditional levels leading up to COVID. So things were not all doom and gloom by any stretch. As I'm sure that many in this room will attest, by Q4 last year, there was a bit of fatigue in the market, certainly. And I think a lot of people were pretty happy to down tools and have that Christmas break and come out in 2023. I know we sure were. And as I'll touch on now, I think the break's done everyone good, and we're seeing some renewed green shoots already this year. So on to 2023, our view remains that there's enough uncertainty in the market that in relation to some of the larger scale IPOs and transaction, there's probably going to be a cautious approach, at least in the short term, the first 3 or 6 months this year. In saying that, and it's obviously pretty early days in early Feb, we are starting to see, particularly at the exploration and junior end of the market, some renewed interest already, with 2 or 3 companies picking up IPOs that were actually shelved at the back end of last year. And so, our view is, and obviously being positive and looking forward, is that there's some green shoots, and we hope that continues. Looking more broadly forward to 2023, there's obviously a number of macroeconomic headwinds for companies, both in the listed and unlisted space, including a potential contraction in consumer demand, recessionary fears, linked to those higher interest rates, and as well as challenges from reduced consumer demand and increasing input costs, including labour and energy. Nonetheless, we think that there remains an appetite for quality issuances to support strategic and opportunistic acquisitions, albeit there's always going to be that tension, particularly with the uncertainty on, deal values and, the cost of debt and how that flows into, consideration and actually making sure the transaction's complete, not just signed. However, if the market begins to believe that inflationary pressures and interest rates are under control, some of those geopolitical tensions, that have really weighed over everyone for the last 12 months or so remain steady, then we're optimistic that towards the back end of 2023, we'll see a pickup in the capital markets and IPOs again. In the last couple of months, we've seen a resurgence in re-compliance transactions. We think that's largely as a result of the 240 odd companies that listed in 2021. A lot of those were junior mining and exploration companies that are now starting to look around for new assets to vend in. In the last 2 or 3 months, we've seen ASX scrutinising some of those transactions more closely, particularly when you're looking to vend in assets within the first 12 to 24 months that weren't part of the prospectus when you listed. Given the time and cost implications of that re-compliance, we'd encourage companies, if you're in that window and these are new assets and significant ones, to consider whether this is an issue from the outset and come and get some advice on that. Last thing you want to do, is get all the way down the track, sign it, and then face ASX picking you up on that. In relation to M&A activity, the tougher macroeconomic conditions and some of that market volatility that we're seeing, we still think that's probably going to make buyers cautious in 2023. Although those same factors, on the other hand, are probably going to play a part in increasing the pool of assets that's available for purchase. So it's a bit of a double-edged sword there. Deals valued at less than that 500 million mark, make up and have traditionally made up the bulk of the M&A activity each year. We expect that to continue, notwithstanding the Newmont and Newcrest merger that was announced recently. Looking forward to 2023, we think that companies, will continue to use M&A to address strategic needs, to expand into some of the newer markets, particularly as we saw from David's presentation, some of those markets in Canada. and also to take advantage of opportunities. We're already seeing, restructuring transactions on the rise. And I think as part of that, probably early in the year as well, there's going to be a certain level of distressed M&A that follows. WA and Canada continue to be amongst the most active regions in the market, in the world, demonstrating the benefits of having assets in those tier 1 jurisdictions. Given the cash that some of those lithium companies, the big lithium companies, have generated and stored away in the last 12 months, I think it's inevitable that we'll see some consolidation in that sector. And we've seen essential metals, but suspect that's just the beginning as some of those players look to consolidate some of the smaller exploration players that are around them. We'll see, again, unsurprisingly, pressure to streamline operations and shed some of those non-strategic assets, some consolidation in those sectors. And again, we're hopeful and expecting that will drive some of the M&A, particularly at the junior end of the market. I think the last point there we've got is just that the private equity, again, in the last couple of years, has continued to put record amounts of capital to work. About 40% by value of the M&A transactions last year were funded by PE, and we think that will continue on in 2023, particularly if there's a stabilisation of some of those headwinds we've seen everyone face in the last 12 months or so. There's a lot of PE funds out there that are still very well funded, and they've got that ability to move very, very quickly if things change. Just moving to some general mining themes and trends for 2023. I think the first one there won't be a surprise to anyone that we still see critical and battery minerals taking centre stage. Notwithstanding some of the material that came out in the last 12 months or so from some of the investment banks in relation to lithium supply and demand, it would appear that sector continues to grow, and that the critical and battery minerals are going to continue to dominate this year. And that's obviously lithium, nickel. The copper sentiment has been strong in the last few months, although given the lack of new near-term producers and some of those geopolitical tensions, particularly in South America, I think that sector is not without its challenges. Rare earths over the next 12 months will continue to rise. I think even, probably in the last month or so, I've seen some nibbles for cobalt and graphite, which have probably copped a little bit of a battering in the last 12 months or so. I think it's safe to say that the ESG is no longer just a catchphrase, and all boards and companies have made that a real focus and target. However, I'm just going to touch on, I think 2022 demonstrated a little bit of the pitfalls of that can cause with ASIC. And ASIC, we're seeing really targeting greenwashing, which is the practice of overrepresenting the extent to which a company's practices are environmentally friendly, sustainable, or ethical. And ASIC's prosecution team has been given a mandate to investigate and prosecute greenwashing aggressively. So it's going to be something that needs to be on companies' radars. Their focus at the moment seems to be around misleading the market on your ability to reduce or eliminate carbon emissions. However, ASIC has made it very clear that their mandate is actually broader than that, and they are going to continue to scrutinise what companies are saying to the market in relation to their social initiatives as well, and also what policies and procedures they have in place and how they're implementing them. And going forward, I think, we think that one of ASIC's key focus is going to be companies that have conveyed a misleading impression about ESG targets, particularly where that's been used to access funding that wouldn't have otherwise been available because of that fund's investment policies relating to ESG. We've actually advised a couple of companies in the last 12 months and assisted them in relation to, ASIC investigations on greenwashing. And the one thing we found, they can be pretty painful, but really important that you get on top of it early. So I'm sure no one in this room will fall into that bucket, but if you do, really important that you get on top of it straight away and reach out to someone who's gone through that process. We think that there's, in relation to downstream processing and refining, and that kind of might be seen more of a development and producers, but we think there are going to be some real opportunities for companies to focus on those downstream processing and refining opportunities. Given worldwide governments' concern about security of supply, we are seeing governments really looking to stimulate that part of the market, both with government grants, underwriting, debt funding, and also project-specific support and allowances. So we think it's a real opportunity for Australia and WA in particular to become a real hub and grow that part of the industry. And I don't think it is just producers and developers. We are seeing some of that funding being available to exploration companies as well. I suspect I'm running a little bit short of time, so I probably won't speak about decarbonisation of the mining industry too much, other than to say that with some of the 2030 targets that are coming out, it is going to be a real focus, but also a real opportunity for companies to differentiate themselves in the market. And it'll become a focus for exploration companies as well, because a lot of the funds and investments will actually have that as a key plank. And so if you're looking to raise money and get access to that, then that will be important. How am I going there? Done? All right, thank you. We'll leave it there. Cheers.
Thank you very much, Michael. Just to clarify too, I don't know if I have already, I don't speak straight after our presenters have spoken, because we just need a couple of seconds to cut up the interviews for the ASX. You think, gosh, that woman's a bit rude. She doesn't say thank you straight away. I do smile at them and give them a bit of a wink on the side and put my thumbs up. That's just my, that's just my way of trying to interact with them. But I try and be a little bit quiet. But you guys can clap madly and show your appreciation. That would be very much appreciated. Right. If you were here last year, you would have seen this fellow up on stage. Andrew Paterson, would you like to come and join us, sir? Where are you? He's making the walk from the back. Look at that. Is there anything you want to play on your way up, or you could? This is one of the happiest mining and exploration geologists that I know. He graduated from Wazenbach in 1993, a few years back. Yeah? I reckon you're happy. I'm going to share with one little story. We met Trevor earlier. Remember, Trevor's nipped off to get his wife from the airport, and he's got flowers on the way, investing in his relationship. It's Valentine's Day. This guy here's got a gorgeous story about how he met his wife. She's quite a high-powered person in mining and was running a very small organisation, in inverted commas, up in Mount Magnet. Yeah. And he was sent out with a company called Harmony. You remember Harmony Resources? And he met this human being. She looked at him and thought, actually, he's not bad, that smiley fellow that graduated from WASM in 1993. They've been together for 12 years. So you'd be a happy camper, wouldn't you, on Valentine's Day? Do you buy the presents?
No.
Oh.
It's her birthday on Thursday.
No, you're going. Stop right there. You were going good to that. That smile is just a facade. Actually, all right, so last year, so you were involved with Great Boulder. So you joined them in 2019. You helped transform them into a gold explorer. He led the identification of a really large gold camp at the Sidewell project, which is up near Meekatharra in Western Australia, for those of you who don't know where that is. You've recently made a pretty big maiden announcement, but it's not quite what you're looking for this time next year. So I'm going to segue straight into you and ask if you all put your hands together, please, and welcome Andrew today to RIU.
Thank you. That was quite an introduction and pretty hard to beat. So yeah, that's true. I was here last year and we had some very high-grade results at our Sidewell gold project near Meekatharra. And I remember saying at the time that we thought that project had the potential for 1 million ounces. And I'm really happy to say 12 months later, we've just released our first resource for Sidewell and we're halfway there. So 518,000 ounces at 2.6 grams a tonne, and located right next to town. So I'll be talking about that. Also talk a bit about our Wellington project, which is just coming online now. And we also have the Whiteheads project near Kalgoorlie. So board and management, the faces that are familiar to many of you. And the key thing with this is this is definitely not a lifestyle company. This is a group of people that get things done. There's 3 geologists balanced out there by Karen O'Neill with commercial experience. So she's there to keep us on the straight and narrow and not get too carried away. And Dan Doran is in the audience today, and he's an up and coming star who will have his own company here in a few years and supported ably by Mel, and a couple of key consultants, particularly Scott Halley's been instrumental at Sidewell. So the company, importantly, has a 50% gender balance between men and women. Unfortunately, we don't have any of the other genders so far, but we're working on that. And the key number here, 38 million market cap, and I'll talk about why, in my view, the company is definitely undervalued with looking to the future that we have. So one of the key points that people sometimes misunderstand is actually the location. When we say we're near Meekatharra, they kind of don't realise that it's actually right on the outskirts of Meekatharra, literally. So in this Google Earth image there on the left-hand side, you can see Paddy's Flat operations in the background. The blue line is our shared tenement boundary, and then the two new resources superimposed in the foreground. So that means the 25-kilometre radius circle on this plan here incorporates Westgold's Bluebird Mill, and it's surrounded by infrastructure with highways, the town, hospital, mobile phone coverage, and it's a very, very easy place to work. So really, the key thing here is for a junior in the exploration space to have a project like this right on the outskirts of Meekatharra is obviously quite unusual. And what we're dealing with at Mulga Bill, we've spoken about this for a while now, is a 6-kilometre corridor of mineralisation there, is an intrusive related gold system there in intermediate volcaniclastics. You can see this is a magnetic image. There's no magnetic signature, and in fact, it's covered by alluvial cover, which is one of the reasons why it's been undiscovered until around the mid-1990s. The first holes were drilled there, but it was left largely dormant until we came along in 2020. And then more recently, we've identified real proper camp scale mineralisation and pathfinder alteration at what we're calling the Ironbark trend, which is now actually going on 15 kilometres of hydrothermal system there. And that's a quote from Scott Halley last week. So don't tell him I put that in because I forgot to ask. So that's a total now of over 20 kilometres of mineralisation. And that's defined by obviously gold, but also pathfinder elements, particularly bismuth, moly, antimony. There's some copper and silver mixed in there. And so far we've defined 500,000 ounces, which represents about 1.7 kilometres of that overall 20K strike. So hence we think the million ounce promise here at Sidewell is actually looking quite conservative, and given the targets that we have for the year ahead, we think we'll deliver on that fairly quickly. This is the mineral resource. I won't dwell on this too long because it's a lot of numbers to take in. The key thing really is the grade there. 431,000 ounces at Mulga Bill and 87,000 high-grade ounces near surface at Ironbark. So both of those are very encouraging. And then particularly the high-grade core at both deposits at about 5 grams a tonne. So we're expecting to see that because we've released some extremely high-grade assays. But it's good to see them reflected in this resource. Everything is inferred. We will be working towards converting parts of that to indicated in the year ahead. Again, a lot of numbers on this collar plan, but this really shows that 1 kilometre stretch of Mulga Bill where we've got most of our RC and diamond drilling, which is where the resource is at the moment. We would expect to extend this both north and south at depth, and also filling in this gap here in between the main trend and the eastern trend. There's a significant shadow there without any significant or effective drilling. With results like 14 metres at 36 grams a tonne, these are real headline numbers of proper bonanza grades. Ironbark similarly is smaller, but much more simple. It's really an orogenic gold system, gold only. It's steeply dipping, sitting on the contact between basalts and surrounding ultramafic. So it's pretty much Eastern Goldfields bread and butter type deposit. And we've really got mineralisation from surface. So this is quite simple, and we're looking to find a number of these types of endowments along that belt. So I just popped in two cross sections here to show you the difference between the two, and they're actually not at the same scale. The one on the left is a larger scale, and that shows some of the complexity at Mulga Bill, where we've got subvertical structures running through the whole thing. Geological continuity is very good. Mineralisation continuity requires more drilling simply because of the tenor of the grades. When we're getting more than 100 grams a tonne in these poddy areas, we need to really infill that. We're also getting relatively flat lying up to 45-degree dipping veins, dipping to the west. And hence you can see the different drill directions that we've used trying to nut all this out. By contrast, iron bark on the right, much simpler, steep dipping, very close to surface. The red blocks there are plus 5 grams a tonne. And I think you would expect that you could dig this up as an open pit pretty much any day of the week. So where to from here? Really the key in outlining our longer term potential is this prospect pipeline. We've already got those two deposits there in the resource category now. We're looking to extend them and upgrade them. We're then looking to do drill testing, particularly down this Ironbark South area. Now this area is the stratigraphic equivalent of the Paddy's Flat lithologies on the western side of the fold. The geology there all folds around from Paddy's Flat up through the Polyel syncline, through our project and down the eastern side. And there's been very little drilling on that. And we're picking up old rab holes from the 1980s, which have never been followed up. The good thing about this area is that it's essentially outcropping, and a lot of it actually is outcropping. We've sampled historical workings there with assays in quartz veins up to 14 grams a tonne. The real significance of that is that it shows that the gold comes through to surface. And so we're not dealing with any depletion or any significant depletion, and therefore any discoveries that we make here should be very close to surface. And then the really exciting thing on this is this big blob down the south end there, which is another kind of multi-element pathfinder anomaly. That's about 3.5 kilometres long. It's defined, the outline there is bismuth at 0.44 grams a tonne. That's associated with antimony and moly as a kind of a temperature gradient coming off that granite contact. So this got Scott Halley very excited, and was when he started using the phrase hydrothermal gold camp. And so we're very keen, you know, we've got outcropping gold, we've got this big pathfinder footprint, very keen to drill test this as soon as we can. So this will be one of our targets for the next 6 months. Moving beyond that, our other big project is Wellington, which is just coming online now. This is in the Irahedi Basin. And really, these tenements have just been granted in the last 3 weeks. You can see the one on the right is actually still in application. We expect that to be coming online soon. And we hope to be out there in the next 2 months doing large-scale geochemistry. So this is like a real big picture target. It's about 60 kilometres wide. The plan on the left shows Wellington in relation to Rumble's discovery and the Strickland Metals project. So, excuse me. So we're using, I guess, following their kind of footprint in terms of what to do to explore for these large-scale base metal deposits. So we aim to have full soils coverage over that in the next few months. Then we'll be following that up with geophysics, drill targeting over the next year or so with a view to drilling it in 2024. So I pretty much raced through that. So still got a bit of time left. So really, I guess what I'm presenting today is the fact that we've come here with big promises. We've delivered on a lot of those promises, and the company is in a really good position moving forward to deliver 1 million ounces. I think in the next 2 years, we would aim to add another 250,000 ounces this year, and hopefully the same next year. And we're discovering those ounces at $17 an ounce at the moment or less. And that's really it. So Wellington's a big sleeper. There's two projects there who are both kind of transformational, excuse me, transformational opportunities. Wellington is 100%. Sidewell's a joint venture with Scott Wilson here, who's in the audience, and I forgot to mention him earlier, so apologies for that, Scott. And really, that's it. So I'm going to leave the last word to my good friend, John Bon Jovi.
How about it? 500,000. Good on you. Well done, Andrew. Now get a bloody present before you go home, or you won't make the other 500,000. Go, I say. Now, team, our next presenter, he is a Perth boy, born and bred. He now resides in Sydney. And if you look at his LinkedIn page, you'll see a little anomaly in there we'll get to in a moment. His day job is with corporate finance at MST in Sydney. He's got more than 35 years in investment banking, both here and also over in England. He's actually spent a large portion of his career advising institutional and corporate clients. It's a really, really big job. But last year, he decided, I'll share those skills, I'll utilise that skills in a slightly different way. And he jumped on board to the board of Zenith Minerals. And in May, he was appointed their executive chairman. Now, as I mentioned, he's a Perth boy. He's done really, really well. As you listen to him speak today, I'm going to remove the one elephant in the room before he gets any further, just so that you're clear before he starts speaking. This picture of him on his LinkedIn page is a picture of him holding the AFL Cup. And God, he's proud. In the AFL trophy I shot, that really nice big shiny one. There's a small problem though. It's got ribbons on it that aren't blue and yellow, and they're not purple and white. What colour are they? Who do you barrack for?
Yellow and black.
Look at his little smile. So this little Perth boy barracks for Richmond. But you know what? If he can stand up and he can live with the courage of that conviction there, and he sticks with what he believes in, I believe he's going to be a sticker with Zenith as well. So let's hear why we should choose to jump into Zenith with the same conviction that he's chosen to jump into them. Would you please make welcome David Ledger, the Executive Chairman of Zenith Minerals.
Thank you very much. And thank you to the RIU for having us here today. I guess that we'd look at Zenith in two ways. We started the exploration project of our lithium assets last year. We owned them, but we were looking for other elements on the assets. We're looking now in terms of the gold and base metals projects and the lithium separately. We're looking to monetize the gold and base metals through Kevin Seymour, who's come on to the team, and we're going to focus on the continuation of our lithium drilling. Got a strong balance sheet, and we're in pretty good shape. Our share price is 23, and we've got a market cap of 82 million. Importantly, with the cash that we've got of 5 million, we also have 6.8 million in listed equities, which are easily monetized and stand as a reserve for us as we go forward. A lot of our shareholders are offshore. We've got a large shareholder base in London and the Middle East, and they particularly dwell in those nominees. Here are the projects. Our lithium projects, you can see there, they've got them around the wrong way, but the Waratah Well and Split Rocks project are the existing assets that we had, and Hayes Hill is one that we recently picked up. We've also got, on the base metals and gold side, Split Rocks, Red Mountain, Devlin Creek, and we have 25% of the Irahidi joint venture with Rumble. Importantly to note that amongst the lithium projects going on in WA at the moment, you'll see that there are 3 hydroxide facilities, 8 mines, JORC compliant resources, but of the exploration companies, we've got 2 of the projects that are in the top 10, and in both of Waratah Well and Split Rocks. And you'll see on the map there, Waratah Well to the north, Split Rocks just south of Southern Cross, and the recently acquired Hayes Hill, which is near Norseman. We've been systematically drilling through 2022 on Split Rocks Lithium, and this represents just a few of the assay results that we've had in. We're awaiting a number of assays that are due to come back, but importantly, we're open at strike, both in a north and south direction, and we've been getting some really interesting results. You can see them up there, but some of the results in here are still pending. So we're waiting for approximately 50 holes, and we'll deliver them when we can. Importantly, in the region, we've been focused in the Rio prospect. You'll see that up to the north, and the drilling has predominantly been in the area that we've talked about. But one thing that we've done is we've done a lot of soil sampling over the target, and it's really interesting when you look at the drilling, both diamond and RC holes that have gone into the Rio prospect. We've got various targets throughout that set 700-kilometre tenement, and the new lithium target, Cielo, has come out. It's a 9 by 2 kilometre area, and we want to really drill test that as we go into the new year. So still got results to come from Split Rocks, and we've got some blue sky potential, but really know where the targeted area is. Waratah Well, this is the one up near Kew, is only relatively new to its drilling. We've got 4 holes in it, but they've been very welcomely received. It's under shallow soil cover, and these holes warrant us going back and having another look at them. So if you look at the 2As in the first slide, you'll see the cross section of that, but they're good intersections, good widths, and we remain very confident on what we can get out of that. This is the option that we acquired over Hayes Hill. We announced this on the 19th of January, and it's a prospecting license that we wanted to work on. We've worked very hard to get to a position to get to work on this, but it's a very good address. You'll see that there's the Dome North, which was Essential Metals prospect that was picked up by Independence Group. And we've got really this perspective for nickel as well as lithium on site. We have a lot of work to do, but it is a target, and we'll be doing some drilling on that as we move forward. On the gold and base metal projects, it's advance, develop, and monetize. We've got to start getting ourselves into cash flow. And that is the intention of why we brought Kevin Seymour in from Ramelius. Kevin's got a vast experience in developing projects, and so his experience will be really important in this adventure. But what we've got is Split Rocks, the Erehidi joint venture, and 2 projects in Queensland being Devlin Creek and Red Mountain. To be honest, we'll just fast track this one at Split Rocks. We're looking to get into the high-grade mineralisation, and we've intersected a lot. So from the ability for us to monetize here is really good. We can, it's a high-grade gold deposit, and we can transfer or toll treat at Edna May, which is Ramelius's plant, or Marvel Locke, which is 40 kilometres to the north. But we've continued to do the in-step drilling. We've got some more results due out in March, and we'll continue to work it up. But we're very confident that this project is worth the effort. This is an exciting project at Red Mountain. It sits between the Krakauer mine and Mount Rawdon, both of whom obviously have a 2 million ounce endowment in them. We've had some interesting intersections, and all the surface soil work that we've done at the moment is indicating that we need to drop some deeper holes into what we expect is a breccia pipe underneath. And Kevin is working on the modelling for that as we speak. So that is going to be starting drilling in approximately April or May, just waiting for the wet season to finish up there in Queensland. And similarly for Devlin Creek to copper gold intrusion, we've got this intersection here which shows Sulphide City. It's an inferred mineral resource. We've got 5 million tonnes on it at the moment at 1.2% copper. The interesting thing about it is that it's open, as you can see, down plunge, and so we want to be putting some holes into that to try and ascertain exactly what it's going to reveal. So we've got 2023. There is a budgeted spend planned for it, and also we have another deposit to the south, about 30 kilometres south at Snook, and we're finding that we're getting some interesting results there. So no resource on that yet, but it is proposed for later this year. And Erahidi, I mentioned that we are in a joint venture with them. We have 25% free carried interest in the joint venture. It's obviously an emerging tier one metal province. I know Shane will speak to you a bit more about it this afternoon, but it's a high grade polymetallic intrusion, and Rumble have so far been getting some very good results out of it. We anticipate that they'll be looking to put a resource out on it sometime in the first or second quarter. This is our board and management. Mick Clifford's been a geologist for us for some time, and he brings a wealth of experience. It's Mick who's going to be focusing on the lithium exploration play and sort of continuing to bring on new projects as we evaluate them. And Kevin Seymour came in as the general manager of discovery, and that's when we were looking to spin the assets out. We've kept them in the company, and it's good that his experience will be able to deliver on the project. We have a strategic partner invested in our lithium projects called EV Metals Group. They initially invested $6 million into our company through a placement, but they can earn up to 60% interest in the lithium projects, which is represented by two initial projects being Waratah and Split Rocks. And they have to spend $7 million within 24 months and deliver a bank feasibility study. The financing of the assets has to be arranged by them, although we can go it alone on a standalone basis. So that is they've largely spent that money. It's an interesting joint venture. They have the plans to develop a hydroxide processing facility in Saudi Arabia, and so that is where the material will go, and not to China. And so we see that as being strategically very different for us. And that is it, with 2 minutes left.
Thank you very much, sir. You clap, then I wait, and then I say thank you. Okay, we'll get that one straight so we get it right. Okay, now, as our next presenter comes up to the stage, you probably looked at you've looked at the name and you thought, well, that's an interesting choice. If I give you a little bit of information, and I want you to revisit that name. So if you lived in ancient Egypt, a black cat was a symbol of wealth, of riches. And remember, ancient Egypt was somewhere where they absolutely loved gold. So now have a think about it again. Black cat syndicate, wealth, riches, gold. This fellow is going to tell us about the journey of Black Cat Syndicate. This is Gareth Solly. Gareth is their managing director. You had your debut in that role back in June last year. I think we were up at the Gold Coast with Stewie. It's the first time you'd addressed us in this particular role. So you've had a bit of practice now.
Debut with
Since
you,
then.
Chrissy? Or-
Was it Sydney?
I've done this a few times now.
A bit longer than that? Okay,
Yeah.
well, so what they've got is a mining syndicate with a really strong record of resource growth. They've got 3 advanced assets that are all based here in Western Australia, and they've got a really experienced team and multi-commodity and multi-operational potential. This is Gareth. Please make him welcome.
Thank you very much, Chrissy. Nice introduction, and good afternoon, ladies and gentlemen. It's brilliant to be here again at another RIU conference. I've done a few now, Chrissy, and an update on Black Cat's activities. I think importantly, we've had a strong start to the year, and we have updated 2 of our resources in the last month, Coyote and Paulson's, and we have 2 of the highest grade gold deposits in Australia. And I'll talk through that and some of our activities today. So we are, an explorer. We're a gold development company, really, because we have 3 advanced projects. We have installed infrastructure. We have 2.3 million ounces of high-grade resource, and we plan to be making a decision to restart Paulson's by the middle of the year. We have other commodities in our packages, lease package as well, across the 3 projects. But we are a gold-first business, and we plan to get back into production sometime within the next 12 months. Corporate snapshot, 267 million shares on the market, 100 million market cap, give or take, over 20 million in the bank. We just did a raise in January and topped up. Institutions hold about 26% of the stock. The directors hold about 10% of the stock, having invested about 8 million of their own funds. Those directors are Paul Chapman, Les Davis, should be in the audience somewhere, veterans in the industry and very knowledgeable blokes. We've got Philip Crutchfield from over on the East Coast, a barrister and businessman, and also dabbles in plenty of other junior explorers. Tony Polglaze has built mills all around the year, so he's our expert in that field. So, and myself being a geologist means we have a very well-rounded board with a full set of skills there. So a bit about what we do, just very quickly. Always acting safely is important, obviously, but maximising expenditure in the ground is a key metric that we've always had. You've got to put the money back into the ground to be able to develop the projects. And we've grown resources very quickly with that motto. Discovery and acquisition play important parts of our business, and we've done well on that front. We now have 2.3 million ounces. Focus on margins. That's why we picked up Paulson's and Coyote. So high-grade assets. High-grade, grade is king. Protect that margin. And we align our staff with our direction to go into production. We have LTIs and KPIs set for when we do start pouring gold. So the 3 assets that we have, Paulson's, Coyote and Caliste, and I'll talk a little bit about each. I'll focus in on Paulson's because that's where we're most active right now. We've got a second drill rig coming to site very soon, and we have just released yesterday an upgrade to the resource there. So we've tripled the ounces that we picked up that project in the middle of last year. So now 258,000 ounces at 10.8 grams per tonne. It is a well-maintained plant. We are working on studies to, upgrade that plant and refurbish it. We think it'll be a low capital restart and it'll happen very quickly. So we want to be in a position to make that decision middle of this year and potentially be pouring gold next year. Coyote, we released a resource update here about a month ago now, and this is a fantastic deposit, 356,000 ounces at 14.6 grams per tonne. And we delivered that with only 5 months of drilling last year, where we were focused in on some new areas of that deposit. Right now, we're looking at studies to upgrade that mill and working on obviously mining studies and regional discoveries. And then Caliste, this is where we IPO'd, 80 square kilometres and no resource when we started 5 years ago, 1.3 million ounces sitting there. We've done a lot of work on approvals, engineering, feasibilities, good cash flow coming out of this project once we take it to construction. And it's not a great time to be building, so it's ready and on the shelf when the market improves. So talk about Paulson's. This is the asset that, created Northern Star, really took them from explorer to miner and gave them the ability to grow. We have 530 square kilometres, really good ground, needs a lot of exploration, but there's some great targets in the package. We've got a deward underground, and that's important. We're in there in the underground right now. Makes it easy for us to explore and grow resource, which we've already shown that we can do. And as I said, low capital restart potential and rapid restart potential. The resource itself, 258 at 10.8 grams per tonne, 56% of that is measured or indicated, brings the total in the package up to over 400,000 ounces, and we're only just getting started. In terms of this resource, a couple of things to note. There's a fair bit of potential that we're already eyeballing in the unclassified parts of this resource. And the other thing to note here is that, Paulson's ran for 12 to 13 years with a resource about what it has right now. It produced about 70,000 ounces per annum consistently over that time. So it looks like it's almost ready to go. We'll put a couple more months worth of drilling into this, update the resources again before we commit to making a decision. A couple of areas that we've been really focusing on, gabbro veins. We've talked about this a lot. We've released lots of really nice numbers out of these areas. The decline here runs 7 kilometres down from the surface to where Northern Star finished. The gabbro veins sit in and around that and adjacent to that. So on the opposite side to where the old mine was mined. So for that reason, this opens up a new area and it creates an opportunity to have a new mining front. And right now, 33% of our current resource sits in those gabbro veins. So we're still drilling these. We'll be adding more resource in these areas, as well as other parts of the mine. Apollo hasn't really been touched since before Northern Star picked this up. We believe it's open. There's high grade in that area, and you can see lots of high grade unmined intersections there. We're drilling this at the moment, and fingers crossed we get some nice results that come out and match in with what we're seeing in the gabbro veins. Now we have started drilling as well for, repeat targets and transformational discoveries. Is Paulson's the only 1 million ounce vein sitting here in this area? We don't think so. No one's drilled below until we've started now. And we've put 3 holes into this, testing drilling towards a seismic target. And that target sits adjacent to the lower gabbro. You can see in this big long green shape here. Just like the original Paulson's mineralisation sits adjacent to that mine gabbro. So that's the target. We haven't drilled the target yet, but we've drilled towards it, and we know that the shear is well mineralised with sulfides, carbonates, everything we want to see, we're seeing. So we'll keep drilling, and we'll also add some EM into this so that we can help target hopefully a bigger ore body going forward. Regionally at Paulson's, there's plenty going on. There's lots of anomalies, both gold and base metals. Those are coming from rock chips and soils, but there's not really a lot of drilling in the area. So there's plenty that we want to get stuck into. 2 that we'll do in the first half of this year will be Belvedere and Mount Clement. Belvedere itself, it's only about 5 kilometres from the Paulson's mill, 10 kilometres around on the road. It's got about a 30,000 ounce resource as is. And obviously there's some really high grade drilling intersections here that Northern Star drilled in 2013 and 14. We've done some early optimization work, and in the bottom corner of this screen, you can see, that some of it does optimize, and we'll be working that into a mine plan in the future. And then if you look at the image, where the drilling was only on a small area where some old workings were, but there's 2 kilometres of strike of rock chips and workings here that really hasn't been tested. So it's wide open, and we're pretty excited to go and start some exploration in the area. Mount Clement, we released an upgraded resource here in November last year. It's about 30 kilometres away from the mill. Lots of gold, lots of silver, lots of lead, and lots of antimony. A big polymetallic system, and it's the third largest antimony deposit in Australia. And obviously antimony is a critical mineral and is going to be important in the future. This is open in every direction, needs a lot more drilling. We've got the rock chips sitting along strike that are cracking grades of gold, copper, antimony and lead and silver. So drilling here planned for the second quarter this year, and we hope to really grow this resource going forward. So the plan for Paterson's is to bring it back into production. It used to produce at around 70,000 ounces per annum. Let's get it back to that point. We want to be in a position to make that decision by the middle of this year. So we've got a second rig turning up on site. We'll be focused in on growing resource, building that resource book and the mine inventory in that time. We're at the same time simultaneously doing our mining and engineering studies. So it would only take about a 6 month, at the moment it's scheduled out as a 6 month refurb process and begin mining and then be pouring gold early next year. Quickly on Coyote, this is elephant country up here. We're about 200 kilometres away from Cali. You know, big deposits are renowned up in this part of the world, but it's a difficult place to work. This was put in care and maintenance in 2013, but we have a lot of infrastructure, a lot of plant here, and we'll do some work on that to see what we can do to upgrade that and how much it would cost to bring it back into production. But after 5 months of drilling, we have released a resource upgrade here, 356,000 ounces at 14.6 grams per tonne. This increase has come about from us focusing on the axial core here, rather than the limbs, which is where the historic mining and historic exploration took place. So there's a lot of resource here. This will be a good project going forward. It's our number 2 project, maybe number 3, depending on what happens with Cal East. But certainly this is looking really good, and we'll do the work to make sure this comes into play in the future. Some big targets in the area as well, big arsenic anomalies, big gold anomalies. Obviously there are some big targets out here, and we'll be doing a lot of regional work over the next couple of years to try and find more. So the plan here, as I said, upgrade studies,